Hello, hello, hello. How am I going to find that out? I'm going to go over here. I'm going to check, see if that is working. Default microphone. No, I want my C15 microphone. Hello, hello, hello. Hello, hello, hello. That out. I'm going to go. Here we go. All right. Thanks for your patience. I did this whole thing without any sound working. The microphone was not working on the last one, so I'll give this a shot. I hope you're safe and you're having a great Saturday. If you're in the Houston area, you're getting a little rain, good time to read a book or do a Sudoku puzzle. I'll get rid of Bill Murray because every day does seem like Groundhog Day lately. Introduce my cat, Bill. I think you might have seen Bill before. He's resting comfortably as he always does. Okay, let's start. We're going to talk about rates, mortgage rates. Interesting topic. The chart here, this is bond prices in the past 30 days. Bond prices move in opposite direction of rates. So bond prices go up, rates come down. Bond prices go down, rates go up. So on this graph, green is good, red is bad. That shows the daily fluctuation in this bond price over the last 30 days. You can see things were getting good, prices up, rates down. Then we had a terrible week. Then the Fed makes their announcement to drop rates to zero. Monday starts out great, but then the following 3 days, it drops down. Crazy volatility on this Thursday. Then a little bit of improvement on Friday. And the next week was a lot of improvement. That's kind of when the government's bailout, or whatever we're calling this $3 trillion plan, comes into focus. This last 4 days or 5 days, however, kind of flat, kind of leveling out. So I'm kind of feeling that we're going to be in this range for a little while. Certainly there'll be opportunities for volatility, but it seems like we've got a little stability after all this uncertainty that happened in the past 30 days as the impact of the virus comes into focus. Rates are in the low threes for 30-year fixed with good credit, high twos, low threes for 15-year fixed stuff. Moving over to my little agenda here. Let's see if I can get rid of this. Okay. So where are rates headed? I think they're kind of leveled out. We should have a month or two of this, I think, in the low threes, maybe the mid threes. Maybe we'll drop down into the high twos a couple times. But I think we're going to be stuck in this range for a while. Let me see if I can make this a little larger, the other way around. Yeah, so that's about rates. So let's talk about I'm going to talk about the impact on consumers with mortgages, the impact of this on the consumers that are wanting to get a mortgage, either buying or refinancing, and impact on the real estate market. And if you have any questions, feel free to put them in the comments, or feel free to like, share, all that kind of stuff. Let's start with the impact on consumers with a mortgage. So if you're hurting, you lost your job, you can't make your payments, call your servicer. That's number one. And I would encourage you, at least on this April 1st payment, to make your payment. The promises that you might be hearing about being able to delay payments or have them forgiven, I wouldn't trust that initially. And even if for some reason you are forgiven, the mechanisms that are built into servicers to report late payments to credit agencies is still turned on. So I wouldn't trust being assured that you won't have your credit report smashed by missing mortgage payments, because that's what happens when you miss mortgage payments and it gets reported to the credit agencies. And no matter how much you complain and say that's unfair and the government this and the government that, and I lost my job this and I lost my job that, servicers, they just don't have the manpower and intelligence to fix your problem. So we went through this in the 2008 time period. A lot of people lost their homes, and they kind of thought that it would all be forgiven because everybody lost their homes. So it wasn't, because we dealt with a lot of people in the early, 2010 to 2015 trying to buy new homes, and their credit was smashed. So I would encourage you, certainly until your servicer tells you exactly and promises what they can do, and it's in writing, and you've got the name of the person at the servicer that told you that, and the phone number, and the date that you talked to them, I wouldn't trust servicing. I would make your payments. Okay, that's impact on consumers wanting to buy or refinance. Well, first of all, do you still have your job? How do we verify that? If your human resource department is probably now working from home, do they have access to your records? How do we reach them to verify that you're still on the job and you're still making money? So that's number one. If you're self-employed, how do we verify that you're in an ongoing business? Some people are busier than they were. Some people are less busy. So our underwriters are going to make calls based on the information that a consumer that's self-employed can provide to us to tell us how their business is ongoing. Here, I get paid 4 times a month from this vendor, and here are the 4 checks that I just received. I just received the last one yesterday. They're still in business. We're still in business. Write a little paragraph or 2 to your loan officer and processor and tell them, how, prove to them that you're still in business. So that's going to be tricky for self-employed people. Refinances, rates are low, so a lot of people are in process to refinance the loan. You might be thinking now would be a good time to refinance a loan because now you need cash out of your house. Now you've got all this equity in your house. It'd be a great time to tap into that at low rate, lock it in for 30 years. Kind of the problem is lenders are slammed, and so it's going to take you 60 days from start to finish to get the access to that equity, to get a check in your hand, and probably longer with some lenders. I'm just saying 60 is kind of what we're thinking internally, how long it's taken for refinances to go. We certainly can do some in 45 days, but I wouldn't promise anybody under 60 days, and I don't think most lenders are. So that could be a problem, because what happens in 60 days to your job and your employment, if you need cash sooner, there's something called a home equity line of credit. I would encourage you to, I can refer you to some bank folks that do home equity lines of credit. You have an existing first mortgage. Here's your home's value. Here's how much you owe on your first mortgage. You get a home equity for this much. You don't touch your first mortgage. Home equity loans or home equity lines of credit, you can receive those in a much shorter time period than it would take you to refinance and get this much, a new loan to pay off the old loan and to get equity out. Hope that makes sense. Does that make sense? The next thing about loans in process, lenders are having lots of problems with they're slammed with the volume. The investors they used to sell loans to no longer are buying loans in some cases. Pretty much the only thing that we are assured of lenders of having cash flow go from, we sell loans to Fannie Mae, Freddie Mac, and investors. Those investors now are gun shy, and just like in 2008 when subprime dried up and disappeared in, sometimes moments, leaving people hanging at the table without any funds to fund their loan. So have those types of loans in today's, like, we don't call them subprime anymore. We call them non-QM. There are lenders that still provide that, but in general, it's a much more difficult, and the landscape is changing daily on the products that are available to lenders. And depending on the lender, maybe they aren't so solvent anymore themselves, and maybe they don't have the ability to fund a certain type of loan that is in process. So open communication with your lender is important. If a lender says, all jumbo has dried up, no one's doing jumbo anymore, well, that's not really true. We do jumbo still. If someone says the whole market is this way, I wouldn't believe them, because I would call around. So find a couple trusted sources and say, are you guys still doing this? And are you guys still doing this? So that's kind of my suggestion. Okay. Oh, interesting thing I read. The Lending Tree keeps stats or tabs on people that do the Google search homes for sale. So that number dropped 32%, I believe, in March, and they project it to drop into the 60-some% from highs earlier this year. So that's probably a leading indicator. Fewer people are going to be buying homes, but probably fewer people will be selling homes. So in economics number one or 101, that means prices stay the same. So I would not think prices are going to drop too much as long as sellers pull back an equal amount as buyers pull back, if that makes sense. There are a lot of creative realtors out there. You can just spend 2 minutes on Facebook and you will be amazed at all the the realtors that are going into homes with FaceTime cameras and video technology to help consumers see homes that are available to purchase. So a lot of props to the realtors that have technology on their side. They're doing a great job, and I'm still getting calls for people that are looking for homes to buy. So there is an ongoing marketplace, at least for now, of people that are looking for homes. But certainly with the unemployment numbers and the economy and somewhat of a turmoil, confidence in someone's ability to make a new mortgage and buy a home is dropping. So I would think fewer buyers, fewer sellers. Okay. I think that is mostly what I wanted to talk about. Do you have any questions? Feel free to holler. I'd appreciate it if you share, or let's see if I can do this. Yeah, I'd appreciate it if you could share, like, all those things, comment. And I'd like to hear from you. What are you doing? What are you experiencing? What is going on in your world? What do you think is going to happen? I think people that are on the front lines of their industries know a lot more than the people that are further up the food chain. So I'd love to hear from you. Message me, email me. I think I have let me see. Wait for it. Wait for it. Text on screen. Boom. Look at that. There's my number and my email address. Let's see if it goes back and forth, or just a one-time thing, I guess. See if it comes around. It comes around. All right. Anyway, enjoyed the moment with you. If you have questions, again, let me hear from you. Don't be a stranger. Stay safe. Talk to you next week.